Hello and welcome to another Smaulgld live stream. Today is 1st of August. It is Wednesday, August 1st, 2018. And tonight's show is entitled What's Up with July U.S. Mint Sales, but we're also going to talk about inflation. Before we do that, let's take a look at the gold and silver prices. Today, gold was down. Opened up around 12.23, got as high as about 12.25, and right now in the aftermarket it's at 12.17. Not much better for silver. Silver opened up at 15.44, cruised on down to about 15.34, and in the aftermarket it's at about 15.38. The Dow Jones was down 81 points at 25,333. NASDAQ up 35.50 to 7707. And the S&P was down 2.93. The yuan continues to get hammered, and we're going to talk about that in the context of inflation. Over on the cryptos, down day for them as well, though they've rebounded a bit in the past hour or so. Bitcoin 7602, Bitcoin Cash 767.44. These are on Coinbase. Ethereum 419.66 and Litecoin 77.65. Also today, what happened? Let's see. Trump calls on Sessions in a tweet. Now you would think he'd have some way of communicating with Jeff Sessions, unless this is all some type of theater. And here's the tweet he sent out this morning. This is a terrible situation, and Attorney General Jeff Sessions should stop this rigged witch hunt right now before it continues to stain our country any further. Bob Mueller is totally conflicted, and his 17, used to be 13, angry Democrats that are doing his dirty work are a disgrace to the United States. Also during the day, it was reported on ABC, there's always sources say. I like when they say they know what the Mueller investigation is up to. They know what spies are up to in North Korea. But ABC News reported that sources say that they're looking into Trump now for conspiracy, and they want to sit down with Trump. But we'll see if there's going to be any type of communication between Trump and Robert Mueller face to face. In other news, Federal Reserve holds rates unchanged. Now that was not unexpected. The Fed is expected to raise rates, however, 2 more times this year. The statement from the Fed, somewhat surprising in that they characterized the economy not as solid as Janet Yellen used to like to say, but instead as strong. Now, the GDP number for the second quarter was 4.1% increase, and the Atlanta Fed, which always starts out the quarter high, has pegged the third quarter now at 4.9%. So those numbers are probably weighing on the gold price, although you might think that the silver price would get a boost from increased industrial production, but silver's getting the worst of both. It's getting hammered because of the reason that gold is getting hammered, but it never really has the same monetary percentage, and it's not benefiting from the increase in industry. The other thing about inflation, now let's just talk about that quickly before we move on to the U.S. Mint numbers. Today, Trump also is talking about hitting China with a tariff hike, and he wants to lift the tariffs up to 25%. He's talking about that being $200 billion, $250 billion. And one of the things that I noted early on was that if the United States were to put tariffs on consumer products, you would get your inflation because prices would be higher, obviously, and there might even be shortages if China decided it wasn't going to ship as much, or for whatever reason, the prices should rise when you have a tariff. Now, the conventional wisdom is when you have tariffs, not tariffs, when you have prices rising, that's good for gold because gold is going to retain your purchasing power. Now, last night we were talking about how the correlation between gold, the money supply, gold, and increased debt. And we saw that correlation in QE1 and QE2. So when the Fed did QE1, announced QE2, did QE2, Fed was taking on more debt, buying more government-backed, more mortgage-backed securities, more U.S. Treasuries. Gold went higher. There was just money printing going on. And when they announced QE3, I think Melissa asked this last night, she said, what if they announce QE4? Won't that lose confidence? Won't then the price of gold go up if they have to do QE4? And I would have thought that would have been the case when they announced QE3. QE3 was announced, I believe, in 2013, and that's really when gold had hit a top, but it hadn't really started to fall. And QE3, which was the biggest of them all, and they still had interest rates at zero, and between 2013 and 2015, the gold and silver prices fell. Now, I wouldn't have seen that coming. The first QE, gold went up. Second QE, gold went up. Third QE, announced to be bigger and better than QEs 1 and 2, gold and silver go down. So, my conventional wisdom, and most people's, would be, you see these tariffs coming, you see inflation, you see gold prices rising. And that could happen, should happen. But I was thinking, well, what would happen if China countered? And when I say China counters, is China's not adverse to destroying the yuan, no matter what people say. I mean, they will, if they have to devalue the yuan by 25%, they may devalue the yuan by 25%. And the US dollar index can go well over 100, even though the yuan isn't in the dollar index. Well, that would wipe out the impact of the inflationary nature of the Chinese imports, because if they devalue the yuan and the dollar gets stronger and the goods would have a 25% tariff on them, it's possible that a lot of that can be mitigated by a yuan a yuan devaluation of 15-20%. Now, I don't think they would do that, but it's possible. I mean, right now the yuan is a 6.8 to 1. They could bring it to 9. I mean, that would be a significant increase if they were to bring it that high. And if that were the case, then that 25% tariff would not really be that big of a deal, right? Because if you have a yuan that's been devalued by 25%, that would take the yuan from 6.8 to, let's say if it was a 6.8 now, and they bring it to 8.5, there's your 25% right there. And which would offset the value of the increase in value in the goods coming to the U.S. Now, that wouldn't be good for China, for sure. That would basically be running to stand still, and that would probably harm the Chinese economy longer term, because they definitely would have to subsidize those losses and extend more money, and they'd have to do their own tax breaks and their own subsidies and their own extension of loans and forgiveness of loans. But that could offset the inflation in the U.S., in which case you wouldn't expect the gold price to go higher as a result of inflation. However, if that carries on for a period of time, and this is something that I've always pointed to as being more likely as a catalyst for driving gold higher, is it could really stretch China, because China is already in the massive throes of a debt Ponzi scheme that's collapsing, and they know it's collapsing, and they've been trying to deleverage. And there's stories out again today about how they got to try to revive the economy by lending more money. Well, that goes totally against what they were saying a month and a half ago about realizing that they've already lent too much money and they have to deleverage and they have to restructure their economy. Now they're saying basically we're screwed and we're in a hole and we have to keep digging and we need more shovels. So let's see how that rolls out. But I'm not counting on anything. I want to get your thoughts in the comment bar there. Now, before we go to the U.S. Mint numbers, let's have a word about mugs. Ten reasons why you should buy a Smaulgld mug. Reasons to buy and hoard mugs. Number 1. Mugs have been used for drinking for more than 5,000 years. Number 2. They are finding more uses for mugs every day. Number 3. We could not live our lives without mugs. Number 4. The Russians and Chinese are buying mugs hand over fist. Number 5. Mugs are made in China. Number 6. Mugs are hard assets. Number 7. Mugs are real wealth. Number 8. Mugs cannot go to zero. Number 9. Mugs are portable. Number 10. Mugs are drinking vessels, period. Wait, there is more. You can mix Mountain House in a mug. You can carry your barter silver in a mug. You can do many things with mugs that you cannot do with fiat currencies. Measure your wealth in mugs. They have mugs at the offices of JP Morgan and central banks. That is all you need to know. When the excrement hits the fan, you'll want to have your Smaulgld mug close by. Buy your Smaulgld mugs today. Reasons to buy and hoard mugs. Number 11. You can stack mugs. As you can see here, mugs are stackable. Add to your mug stack today. Buy a Smaulgld mug. Reasons to buy and hoard mugs. Number 12. You can put coffee in a mug. As you can see here, someone very clever has done so. Buy a Smaulgld mug today. Reasons to buy and hoard mugs. Number 13. You can put cognac in a mug. As you can see here, someone is thinking of putting cognac in a mug. Buy a Smaulgld mug today. Reasons to buy and hoard mugs. Number 14. You can display a mug on a studio soundboard. As you can see here, someone has displayed a mug on a studio soundboard. This highlights how versatile mugs can be. Mugs can be put in countless places, and we intend to show you as many of those places as possible. Buy a Smaulgld mug today. Reasons to buy and hoard mugs. Number 15. Mugs do not require electricity. As Smaulgld subscriber Wild Bill points out, mugs will still be usable after an EMP. Mugs do not require electricity. Here is a picture of a Smaulgld mug and another Smaulgld mug. They will look the same before and after an EMP and never require electricity. Buy a Smaulgld mug today. Alright, we've got your marching orders to buy your Smaulgld mugs. If you're smart, you know what's happening. Metals have been getting crushed since June. Yes, we've been talking about that. Now, before we go to the U.S. Mint numbers, and for whatever they're worth, we have a contest. You should see on your screen a Smaulgld eraser, a game changer. You don't just erase stuff, you can change the game with this Smaulgld eraser. The first person who can answer this question in the comment bar will have one shipped to them for free. You will be a winner of our game-changing Smaulgld eraser. Here comes the question. It's a Smaulgld question. You might be able to Google it, but it might take you too long. So you've been paying attention to the Smaulgld podcast, you can win yourself a Smaulgld game changer eraser. Here's the question. In what year did the United States issue a silver confiscation order, and what was the pressing need for the silver? So I'll give you a minute to answer that question. If we have a winner, I will identify you as the winner and we will ship out your Smaulgld game changing eraser tomorrow. All right, let's take a look now at the U.S. Mint sales. In July, the United States Mint managed to sell 35,000 ounces of gold, which is not bad at all. And that's basically a result of the price of gold heading downward. And the month before, the U.S. Mint sold 21,500 American gold eagles at 1 ounce, and then the month before 18,500. Those are all respectable numbers. they do contrast February, March, and April's numbers of 5,000, 2,500, and 4,000. Now, if you take into account the American gold buffalo sales, which had a very, very strong July, it looks like mint sales for gold are back to where they were in the last few years. July American gold buffalo sales almost equaled American gold eagle sales. Generally, there's about a 2 to 3 to 1 difference between the two. 24,500 American gold buffaloes were sold in July. So gold sales, it appears people are finally on the retail level taking a look at gold. They're not holding back. They're buying the gold eagles. And they're not really, sometimes you see when you have these dips in gold sales, people tiptoe back into gold through the 1/10 ounce, but it's not what we're seeing now. We're seeing the bulk of the sales, 31,500 1 ounce sold in July, and only 25,000 1/10 ounce gold eagles sold, which is effectively only 2,500 ounces of gold. So if people are going to buy gold, they seem to be the bigger players going for the entire ounce. Now, over on the silver side, still we're in a bit of a dearth. We're at 885,000 1 ounce American silver eagles, and so far to date, just 7,707,500 American silver eagles. So other than India, where we're seeing strong demand, we are not seeing strong demand in the United States for silver. Now, I'm surprised about... hold on, we got a question here. Delonzo Johnson says 1965, and he says silver, and good try. It's a wrong answer. 1965 was the year when the United States decided to finally finish wrapping up printing or minting silver coins, 90% silver, half dollars, quarters, and dimes, and they used 550 million ounces of silver to mint those coins. And not only did they were all dated 1964 because they were so bent on making so many of them before they stopped, they minted them into like May of 1965. So good try, but that is not the answer. What every man should have says, I do a search and the first result is right back to Smaulgld, 1934. That is correct, but why? If you can tell me why. Now, remember, in 1933, the government confiscated gold, but it was for an entirely different reason. They confiscated gold, they took the coins out of circulation, and they melted that gold down and they stuffed it in Fort Knox. That is not why they confiscated silver in 1934. There's another reason. A hint is the Pittman Act of 1918. All right, let's get back to our silver issues. Now, one of the things that I'm surprised about is all the I see online constantly. Keep stacking, I'm stacking, but I don't see any buying. I really don't. I mean, when not just on the U.S. Mint, but even on the Smaulgld site, Smaulgld used to sell a large amount of silver, a large amount of gold, and that all stopped at the same time when the U.S. Mint basically slowed down its sales. So it coincided very neatly, and I hear a lot of people saying they're buying, but I just don't see as much of it as I used to. We do see the silver sales in India have picked up, and that is very reminiscent of 2015 when the prices went all the way down to 1381 that year, down from 18, I think 20 or something, down to 1351. India became a big buyer. India is a big buyer again now as the price is dropping. Now, I had reported on the 2,800 tons that had been brought into India through April. I have preliminary numbers, I haven't published them yet, for May and June, and they're pretty much on the same pace. So it looks like this year India is going to have a record year, especially if the price stays low. But that highlights what we were talking about last night. This type of physical demand doesn't seem to be impacting the price. In fact, it seems to be the other way around. when the paper price goes down, the physical buying picks up. But the physical buying picking up doesn't seem to put any upward pressure on the price of silver or gold. Now, India's amounts are large enough to do so. Whatever happens at the U.S. Mint, especially with gold, isn't going to make one bit of difference, because whether they sell 35,000 ounces or 150,000 ounces, it's really not a lot of gold. No matter what the central banks do, the number one central bank, Russia, buying 224 tons a year, isn't going to have much of an impact. It's 5-6% just of 1 year's global mining production. India is really a big key, because India can import 900, 1,000 tons and take a real substantial chunk out of mining production. And they have no domestic mining in India, though there was a story out the other day they're trying to get a gold mine revived. Also, same thing with silver. When India is in full swing buying 8,500 tons, maybe this year 9,000 tons, you're talking about 40% of global silver mining production. Now, again, when they did that in 2015, didn't impact the price. They just were the beneficiaries of that price. So something to keep an eye on, because I don't know what is going to be the catalyst for the rising prices of gold and silver. And the other thing is with cryptos. Some people said that the cryptos took money away from the gold and silver markets, and that's possible that it did, but the volume currently of money going into gold and into cryptocurrencies is very low. And the cryptos have been beaten down 60, 80, 90%. So you can't attribute the current lack of price action, the bearish sentiment in gold and silver, the very low U.S. mint sales on cryptocurrencies, unless the cryptocurrencies were basically all the people that were in gold and silver moved everything to cryptocurrencies and now they're wiped out. I don't think so, because I was listening to Peter Schiff today. He was talking about a survey that I'd seen also that only 2% of Americans were interested in cryptocurrencies. He was making the point, well, that's not very good, but I would think it's probably the same low numbers for gold and silver. But putting that aside, the idea that cryptos are taking from gold and silver demand, I'm not sure. And his point, and I agree with this, he said that's because cryptos are speculative. That's right. And if cryptos are speculative, I don't think cryptos are store of value. I don't think Bitcoin is a store of value. It's a speculative asset. It's got none of the properties of gold. You're relying on miners, electricity, internet. You're relying on all these decentralized exchanges. You're relying on your phone working. There's so much to Bitcoin that you can't call it the same type of store of value. So it has to, by definition, attract a different type of investor. Okay, so maybe there's some overlap, and I'm sure there is, because a lot of people are attracted to cryptocurrencies that like gold and silver, not because they thought, well, some did, that Bitcoin was gold and Litecoin was silver. What they liked about them was that they were outside. They were non-traditional assets. They were supposedly fighting central banks. So there is that type of investor, but there's no way that a person who's trying to preserve their wealth is pouring into cryptocurrencies. So now you're at the point was, okay, well, if it's not cryptos that's keeping the money away from gold and silver, what is it? And we talked about this last night. I don't think we came up with a an answer. At least I didn't have one. And by the way, if you go, I'll give you the link. I did put the charts up. It's hard to load up the charts while I'm talking. So what I do is after each podcast, I go and I put back I put up the charts in a blog post along with the video that we did. So if you missed the podcast, you came in the middle of it, you can go back and watch it, not on YouTube, but on the Smaulgld site. If you go to smaulgld.com, you can not only watch the video there, but below the video, I put all the charts. So I'm going to give you that link right now. And it's easy to follow along then. You don't have to toggle back and forth between the YouTube and the Smaulgld site. So if you go over to the Smaulgld site, and you might as well subscribe there, because this way you know that you're going to get the important updates. I don't send one out every day. But if you get used to going to the Smaulgld site, that's where all the information is. You can do your research from there. Everything's tabbed, so you can go back and see, oh, I want to know what Russian gold reserve additions were in March of 2017. You can find that very easily. You want to see where Indian gold imports are. You want to see Chinese gold reserves. You want to see the Shanghai Gold Exchange withdrawals. They're all there, and then there's some anchor content. So it's a good place to get your information from, and then you can follow these videos along there. All right. Let's go to the questions. I still don't have a winner of the Smaulgld erasers. For those of you who want to participate in the contest, we still don't have a winner. You win a Smaulgld Game Changer eraser. I got one in my hand right now. The question is, it's a two-part question. In what year did the United States issue a silver confiscation order? That's part one. In part two, what was the pressing need the U.S. government had for that silver in 1934? And remember, it's different than the gold confiscation of 1933. Both the gold confiscation of 1933 and 1934 were issued by executive order by then President Roosevelt. But unlike the gold, which then was confiscated, the gold coins were confiscated, they were melted down, and they built a special vault for them called Fort Knox, which was ready in 1937, and they stuffed all of that gold in there. They did not do this thing. They did not do the same for silver. So what every man should have is still trying. He's got the year 1934, Executive Order 6814, requiring the delivery of all silver to the United States for coinage. There you go. So very briefly, so what every man should have, if you email me your name and address at smaulgld@gmail.com, I will ship you your Smaulgld Game Changer eraser. Good research there. For those you don't know, the reason they needed it for coinage, the hint was the Pittman Act. Oh, you ordered it. I don't have the aluminum mug at the moment. Did you order it? If you ordered it from the store, then you'll get it directly from the store. If you can only order the Super Classic and Classic mugs, and those are the ones I ship out, and now I have erasers. All other Smaulgld products, if you did order it from the website, that'll get handled from the store. To get the Game Changer eraser, you'll have to send me an email. So what they needed the coinage for was they had melted down basically half of all of their Morgan silver dollars to ship to England, who needed silver to make rupees because they were then in charge of India, and there was a silver shortage there. So when they melted down all of those silver dollars in 1918, they had an agreement that they would then replace them. But to replace them, all the new silver that they mined out of Nevada went to replacing the silver dollars. And as what happened was, they were replacing the silver dollars for a period of about 10 years. But during that time, or 12 years, they weren't minting any more dimes or quarters because they didn't have enough silver. The silver they had was all going to make the silver dollars. So those coins got worn out and they weren't minting anymore. And they finally, and that's why if you ever look at key dates for dimes and quarters and half dollars, you'll see it's during that period. They didn't make that many of them. Like I think it's 1921 dime. Very expensive dime. I think you can pay $100 for a 1921 dime because it's so rare. So that's the story behind that. All right. Let's see what other questions we got here. Congratulations to what every man should have for winning the Smaulgld Game Changing Eraser. We'll try to do a contest every night, and I'm going to base them on Smaulgld articles. So maybe you want to read up so you don't have to go searching. But well done to what every man should have. All right, Wilfred says, these mugs sound like a game changer, end of U.S. hegemony. You know, the other day I was having a conversation with a subscriber, and we had been talking about Ron Paul, and I was saying that he's been saying this kind of stuff for 30, 40 years. And it's funny, I had forgotten this. If you actually look up end of dollar hegemony, the reason everyone says that is from the good doctor himself. In 2006, he gave a speech, I think it was to Congress, and he was talking about end of dollar hegemony. And he went on and on about that, and he's still talking about it. He's talking, the dollar collapse has been permeating Dr. Paul's narrative for a very, very long time. But he's actually the father of end of dollar hegemony. I don't think he's the founder of Game Changer or Game Over or Silver Shortage, but we have to attribute end of dollar hegemony to Dr. Ron Paul. All right, there's, okay. Metals have been getting crushed since June, what every man should have. And the question is, why? Well, last night, and did I give you the link? Yes, what drives the gold price? I don't really have an answer. I mean, some people will say it's confidence. Consumers are confident. I'm thinking there's something along the lines that it's a lack of education. It's a lack of monetary connection to the metals. I think a lot of people that watch this channel and basically all the other gold and silver channels, they have a hyper education to the point where it's robotic. Gold is money, period. But I think people younger and people that don't watch these channels, they don't have that connection, and I think it's been dissipated. So when you have events that you would think 20, 30 years ago would send the metals skyrocketing, you don't see it. So that may have something to do with it, and it may be that even though money's not going into cryptocurrencies, there's still this concept that digital assets, stocks, that's where everything should be. Because you still have people buying Facebook and Twitter, and that's changing, which is good. I mean, the fact that those companies, especially Twitter doesn't make any money. Elon Musk was out today, I don't know what he was saying, but Tesla's, people have been buying stocks. You talk about risk, there's not even profits in those things. And they've gone up exponentially, and then where you would think there's no risk, like in gold and to a lesser extent silver, they've gone down. It doesn't really make sense. Yes, there's manipulation. Yes, there's policies but I think it's a lot to do with education, people, how they view value. And they see value in things not based on profit, not based on stability, and they bid up stocks. I think that's been engineered. It could be a generational educational thing. All right. Delanzo Johnson. He had a good crack at it. He could have won the eraser. Well, have another chance tomorrow. Johnny Bucknell, you the man, Luis. Keep up the good work. Well, thank you, Johnny. DW. I watched a YouTube video about how China buying more gold will take over the pricing of physical gold. Why would they? They're buying at a low piece. Why would they raise it? Well, first of all, if you break that down, from what we've seen, physical buying doesn't seem to impact the price. Now, I've done charts, and maybe this will be a question for tomorrow night. When I talk about the Shanghai Gold Exchange, the amount of physical gold that gets withdrawn, but doesn't leave the country, but it can come off the exchange, it's about 2,500 tons a year. And I think the amount of gold that's delivered pursuant to those people that are standing for delivery on COMEX, it's like 100 tons, 80 tons. It's nothing compared to the physical deliveries on the Shanghai Gold Exchange. Now, from what we've seen, You would think, well, one exchange has volumes of 2,500 tons a year withdrawn. The other one has 100, 60, 80. You would think the one that's having the larger physical turnover would have control of the price, i.e. China in the Shanghai Gold Exchange. However, the volume trading in dollar terms, forget delivery, those contracts that trade, it's like 10, I don't know what the exact number is, but far more notional amount of gold is traded on the COMEX futures exchanges. Now, there may not be any delivery of it, but that's considered gold trading. Also, the amount of gold that's in the ETFs is about a year's. It's like, no, it's not that much. I think it's about, let me check. But the amount of gold that's in ETFs and that flows in and out of there, that's also a very large amount. So when people say, and they've been saying this recently, only because they see the correlation between the gold price and the SDR, the gold price and the yuan, that somehow that means that China's doing something to peg it. I don't think so. But you ask, why would they do it? Well, and the impression there that I get from DW is that they're buying at a low price. Why would they raise it? Well, they may want to have control over the price, but not to raise it. Maybe they want to keep it down so they can buy more. So I don't think that, though, that they've taken control over the price. I think there used to be a dollar-yen correlation. Remember that? See, Craig Hemke follows this stuff, and I think he was the first one to notice that, and he tracked that, and that generally there was a correlation there. I think now he might have been the first one to notice the correlation either between the SDR and gold and Jim Rickards was saying 900 SDR and gold. I think Craig was looking at the gold and the Chinese yuan. Now those correlations exist, and I don't know if that means they control the price, but the incentive to control the price would probably be not to raise it, but to buy more, but possibly once they had more to raise it. And one reason, now this could make sense, is they might want to raise it in order to help devalue the yuan because of the upcoming trade war that they're having, and they're going to need a devalued yuan. See, I don't think you need today to use gold in the same way you used to. So, for example, when FDR wanted to devalue the dollar, it was very easy. He just took the gold at $20.67, ratcheted it up 67% to $35, and bingo, there goes down the dollar. But that's because, as we talked about, I think a couple of nights ago, that gold, the value of gold is no longer 80-90% monetary. It's less because it's not as prevalent in the monetary system as it was easily during Bretton Woods in the years immediately after in 1971. And obviously silver has no monetary value currently other than a historic, people still think of it that way, but it doesn't have it. There's no tie to the monetary system. There's no coinage. There's no central banks that own silver at all. So, all right, let's see. So there's the winning answer by what every man should have. Were you going to get the answer? You thought you had the answer, DW? Every man beat you to it? All right. DW, we melt down our U.S. coins, ship them to England, then force our people to send in their silver to make more U.S. coins. Yes, that is U.S. government for you. Well, there's a little more to that story, though. I don't think that was politics, and they weren't. Okay, the Silver Confiscation Act in 1934 wasn't about screwing the people. It was actually covering a mistake they made because you didn't have to turn in your dimes, quarters, and half dollars because, first of all, there weren't that many of them. They needed the silver to make more silver coins. It was self-dealing. What happened in 1918 was they saw a way of making money. And this is Pittman. He was the Harry Reid of Nevada of his day. A way of helping England out, making a profit on the melted down Morgans, and then giving Nevada a silver contract at above market prices to replace all the silver they melted down. Now, that is self-dealing government, but it was unintended consequences, but they weren't trying to screw people out of their silver. They were just self-dealing, the silver industry, and Pittman was at the heart of it. And Pittman was part of the 1934 Act as well. And they didn't just the bulk of the silver that they got during that 1934, 1937, 38 period was from buying it from all over the world too, and mining extras. So the amount that they got back from the people wasn't that much, because remember, you weren't turning in your coins, you were turning in silverware and other types of silver. People just didn't have it that much lying around. So the idea was they needed it for coins. So they did give it back to the people, but it was somewhat of a self-dealing bit of incompetence. ASMR. I wonder what gold price would be if it weren't based on paper price. It's hard to know that, because if you think about the Gold Act of 1934, the U.S. Congress set the price of gold at $35 an ounce. Between the April 1933 FDR executive order confiscating the silver at $20.67, FDR and Morgenthau, I think it was the Secretary of Treasury, used to just set the price of gold in the morning. And then finally, Congress set the price in early 1934 at $35 an ounce. Then, from 1934 to 1971, the price of gold was $35 an ounce. Now that's nuts. In 1944, when they came up with the Bretton Woods Agreement, it was $35 an ounce. And they kept the price of gold at $35 an ounce all the way through 1971. Not only were countries coming to the U.S. to get their gold as they were entitled to if they had dollars, central banks. You couldn't go to the bank in 1970, 1969 and give them $20 and get gold. You can get silver, but you couldn't get gold. Only central banks could do that. But central banks realized not just that the United States was now running small trade deficits and was racking up the debt, but the fact that gold had not risen from 1934 to 1971, even if the United States was playing perfectly, didn't have a deficit, was still an exporting power, wasn't in Vietnam, it would still be a good deal to go and get your gold at $35 an ounce, because 1971, if you can get gold for $35 an ounce, the same price you can get it at 1934. And what was happening, the reason they came up with the SDRs in 1969 was because there was a liquidity shortage. There weren't enough dollars, and they didn't want to raise the price of gold and devalue the dollar. So they tried valiantly to keep the price of gold at $35 an ounce through the London gold pools. And they were putting a lot of pressure on South Africa, who was the free world's largest gold producer. Remember, the other large gold producer at the time was Russia. China wasn't producing gold at the time, but Russia was part of the Soviet Union, and that gold didn't leave. So the United States and the Western world were heavily dependent on South Africa to produce money for them for international reserves and trade. And they were producing an enormous amount. That's why, in a way, South Africa today is not a profitable mining region, because their mines are tapped out. I mean, they exhausted them over the last 40, 50 years. So what would the price of gold be if there wasn't? It's hard to know, because in the modern world, it has never been. Same with silver. So think through, we'll go through gold. Congress sets the price of gold at 1934 at $35 an ounce. It stays that price from 1971. So you have no idea about price discovery. There's some incidents of what the price was in China at the time, but that's not it's not the same as a mature market. People were paying more outside the system. Americans weren't allowed to own gold from 1934 to 1974. So that whole period, you can't even say is valid as to what the gold price would have been. We have no idea. All right, so now you have 40 years of no price discovery, totally manipulated. Nixon takes the country off the gold standard, lets the gold price float. The thought was, in 1971, when Nixon took the country off the gold standard, the price of gold would drop. Why? Well, it's not needed for money anymore, and it would just be used for trinkets and jewelry, and it would go down. No. Too many people thought at the time it was definitely money, and it was money yesterday, and just because Nixon goes on TV and says it's not, doesn't mean it's not part of the monetary system. However, that's more true today. When I talk about trinkets and so on, the gold demand today is far more for trinkets and jewelry than it is for investment demand. But back then, that wasn't the case. People saw they needed to have the gold, and there was investment gold demand at the time. So from 1934 to 1971, you have no way of knowing what the price of gold was. In 1975, they introduced gold futures trading. In December of 1974, they finally allow Americans to own gold again. So you would think, oh, now the physical market will take over. No, won't take over, because ever since Americans have been allowed to own gold, they came out with futures trading, which is designed to disincentivize people to hold gold, because it's demoralizing to see the price go up and go down, and you can smash it up and down as you wish. And also you say, well, why do I need to hold gold when I can get these contracts? So we don't know what the price of gold would be today, because we've had over almost 100 years of total intervention and total control of the gold price. In fact, there was more control of the gold price when there was the gold standard, because they were trying to keep it at $35 an ounce. So you can only guess, and I don't have an answer. What every man should have. So Russia and China are just buying mine supplies. No. Russia is the number 3 gold producer, and they produce about 280, 320 tons of gold a year. They take 70-80% of that gold and put it right into their central bank. Russia then sells their excess gold to China, and just last year they arranged to sell some of it to India. China mines about 400 tons of gold a year the last 3-4 years. All that stays in China. Doesn't necessarily end up on the People's Bank of China's balance sheet, but it stays in China. China also, however, imports mega amounts, more than they actually, again, this is all on the Smaulgld site, there's charts and numbers, imports gold to Hong Kong, which is listed, which has been refined in Switzerland mostly, some in Australia, and cast into kilo bars, and shipped into China. So China's gold mining production does not cover its internal demand. Even though the number 1 gold producer, they still have to import a lot of gold from Russia, from Switzerland, other places, to satisfy their gold needs. And the amount of gold that gets withdrawn in the Shanghai Gold Exchange is 2,500 tons a year. So there's a lot of gold going into China, and they're not satisfying their demand from their gold mining. The next one, so there are no actual gold flows from U.S., Europe to China, Russia, Middle East. No, there are. There are. In fact, I should do a show on that with some charts showing the gold flows. The point about Russia and Kazakhstan, and I have those numbers tomorrow for Kazakhstan, when people get excited about Russia and Kazakhstan central banks adding gold, I don't get excited about it, because it's not that much, and it's coming from their own mine. So it's not flows of gold that's taking from somewhere else. I mean, to the extent that Russian gold doesn't leave Russia, that's less gold for the rest of the country, the rest of the world. Same with Kazakhstan. But you got to remember, especially for Kazakhstan, the world was never relying on supplying it with gold. In 2005 or 6, they were only producing 15, 18 tons a year. It's only because they made an effort to mine more gold that they're now mining 70 to 80 tons a year, and basically keeping 40 or 50 of those tons in-house. Gold production has gone up globally over the last 10 years, in part because there's increased production in China, increased production in Russia, increased production in Kazakhstan, and some other places. So when they withhold their gold in Russia and Kazakhstan, the rest of the world wasn't counting on that gold in the first place. But there are significant flows of gold into China, no doubt. And there's also gold that I can't track that goes into Shanghai and other Chinese ports. That's not reported. There could be more gold going in that way. And as I mentioned, there's significant gold that gets exported into India. All right. CRG 7127, fun people you never hear from: Bill Holter, Andrew Maguire, and Jim Sinclair. Well, I think Jim Sinclair had the gold prediction of 50,000 about 6 or 7 years ago. I don't know if I don't hear from anymore. I know I see McGuire and Holter still produce. I guess Sinclair does that production with Bill Holter. Guillaume Charles, are gold and silver media of exchange? I don't think so. No, they're not. They could be. They were for thousands of years. Medium of exchange for people is when you have a silver coin and you hand it to somebody and they give you a mug, a Smaulgld mug. The silver is acted as a medium of exchange. I would take, if you want to mail it to me, to my P.O. box, I would take it, but I would be the exception, not the rule. So in general, you cannot use silver. You can use silver as a medium of exchange, but no one does, for the most part. Most transactions occur with either cash or digital check or credit card or debit card. Now, if they do, their demand and value would increase. Well, obviously, but the question is, are we heading further away from gold and silver's use as a medium exchange or closer to it? One would say moving further away because we don't use it as much. Someone could say we're moving closer to it with things like gold money, gold debit cards, blockchain. There's a lot of companies now that are digitizing gold and silver. So yes, if it becomes that way, then that could be an increase in the value. For the love of coins, your mocking of metals is totally off-putting. You're free to go off the channel then. That's my style. I look at things objectively. I don't worship gold. I don't worship silver. And I don't like a lot of nonsense that I hear that I think is very, very counterproductive when people tout these stories and repeat them as if gold's game changer, and it's complete rubbish. I think that actually does a disservice to sane and rational people who may be interested in buying gold or silver for the real reasons. So I have no apologies for that, and if you don't like it, you can go to 20 or 30 other channels that will tell you the same stories and not give you the analysis that you can get here. DW, if you look at the website, U.S. National Debt Clock. Yeah, I don't know what. Everyone always cites that clock, but I don't know why anyone would think that clock is somehow authentic. I don't know what calculation they use. It's a gimmick. It's not analysis. It's just the U.S. debt clock. They say it's worth that, but go ask somebody to give you $642 an ounce. Kevin Phillip, good to see you. By the way, did you get your mug yet? It was shipped out. Many mugs went up 100x. Yes, they did. A lot of the Canadian mining, Toronto stocks, and so on were went up hot. Nathan Chandler, why do central banks hold go for no ties to the financial system? No, there are ties to the financial system. What I said was there are fewer ties to the financial system today than there were back in 1971. Obviously, central banks hold gold, but as a percentage of reserves, they're much lower now than they ever were. So, for example, let's look at Russia. And I cover it every month. Russia's gold reserves are about 1,980 tons. Their total foreign reserves, currency, treasuries, bonds, is about 470 billion. Of that, only 83 billion is gold. So even Russia, which has made a concerted effort to reorganize its balance sheet to include gold, it's only 17-18% of its balance sheet. Now, there are some countries, Nathan, like Canada, which has a AAA sovereign rating, has no gold. So that's my point, is that it would be inconceivable for a country to have no gold 40 years ago and be considered a sovereign, a AAA rated country. Would make it just couldn't exist. But today you have the possibility that there are countries out there, and I'll rattle them off for you, they either have no gold or have sold significant amounts of gold or haven't added any. So let's go through them. Swiss National Bank sold 60% of their gold just before they joined the IMF. They used to have over 2,000 tons. Now they have 1,040. They haven't added any since 2000. The United Kingdom, the center of the city of London, biggest, financial place in the world. The United Kingdom has 310 tons at the Bank of England. That's it. Kazakhstan has 320 tons. So England, big supposed financial home of the Rothschilds, all that, 310 tons, nothing. India, 20,000 plus tons in the country, only 557 tons on its balance sheet at the Reserve Bank of India. Germany, second largest gold holder in the world, while it repatriated gold, hasn't added any gold, and in fact, over the last 10, 15 years, has shed 40 tons because they sell it to the coin makers in Germany to make coins, but they don't replace the gold. Germany, France, Italy, Netherlands, Spain, Portugal, same amount of gold they've had forever. So they're not adding to their gold. They may repatriate it, but they don't add to it. The United States, whether they have what they say they have, what they say they have hasn't changed since 1951. So gold is not being added into the financial system. Gold, central banks were net sellers of gold up to about 5 years ago, and the only reason they are considered net buyers of gold today is because basically Russia and Kazakhstan have added about 350 tons of gold along with Turkey. But again, the amount that those central banks add is only 350 tons. Remember, there's mined well over 3,000 tons a year. So we're not saying that central banks don't hold gold. What I'm saying is that the ties are not as strong. No central bank holds silver. So the value of gold today, I believe, is not as driven by financial events as it once was. And the demand for gold, for jewelry, is twice the amount as the investment demand. Now that has to tell you something. That means that the gold demand is driven largely not from financial need, but from people getting wealthy in India and China and being able to buy it. And I do think that that has something to do with why gold doesn't move as much as it used to. Look at, if you would think, look at it this way. Gold should be like that debt clock where it is, because the debt keeps increasing. There should be a correlation between every time you increase more debt, the gold price should be moving up with it, but it's not. And I think that's the reason. But when people insist, see, maybe it should be, but it isn't. What I'm here to show you is that it isn't. It hasn't been. I'd say for the last 5 or 10 years, there's a bit of a correlation break that gold and silver are not tied as much as they once were to the financial. And the other thing is what other people have been pointing out is when people, quote, buy gold or people invest in gold, it's not taking delivery. They're buying gold by buying COMEX futures contracts. That's where the bulk of the trading dollar value in gold is. Or they're buying ETFs. So that's another reason there's not the same connection, because if it was purely based on physical supply and demand, they've removed the physical demand, a lot of it, and moved it into paper demand or digital demand. DW, thanks for your input. Okay, you're welcome. Gilliam Charles says, anyone heard of gold or silver stackers in Venezuela? I haven't, but you'd have to imagine that they are, and they're probably best to keep their mouth shut because they have the only, perhaps, value of, because if you have the boulevard there. I have heard that the dollar is worth a lot in Venezuela. I have heard that of Bitcoin and Litecoin miners there existing. So clearly, when your currency fails, that's when gold and silver shine, obviously. There would be test cases for stackers here when SHTF occurs. I expect they left Venezuela long ago. Well, that's true. If you have the means to get out of a SHTF environment, if you just have to go to Colombia or wherever they had to go, I don't think staying there and bragging about your purchasing power is probably the best thing to do. I mean, the other thing is when you have a very bad economic situation where everything freezes up and you have hyperinflation like you've never seen, it also means, like, okay, so you have gold or silver and you're in Venezuela. You go to the grocery store. There's nothing in the grocery store. Maybe you could buy whatever's in there, but there's nothing in there. So actually, in that case, the reason to have the gold or silver is to get out, because you're not going to be rich in Venezuela because there's nothing in Venezuela. There's no goods or services. I'm exaggerating, but the point being is when you're rich, for example, when Chinese and Indians gain wealth and they buy gold, they're truly wealthy because the society is wealthy. Not because their value of their gold and silver is skyrocketing against the yuan or the rupee. It's because they're living in a richer society. ASMR people. Adding gold seems to do nothing in terms of increasing the value of a country's currency. That's a very astute point. The Russian ruble is not doing better because it has gold. The Chinese yuan is getting hammered. Doesn't matter that it has gold. The Canadian dollar is relatively strong and it has no gold. The United States dollar is very strong today, and there are doubts of whether it has its gold. So that's another point, that the idea that a country has gold. Venezuela used to have a lot of gold. They had to sell it, but it never underpinned the rupee. The reason that the Bretton Woods gave the dollar strength was, and I never liked Bretton Woods, was because if you held dollars as a central bank, not as a person, you can go to the U.S. and say, give me gold for it. And as I said earlier, why wouldn't you? Why wouldn't you if you had dollars? I don't care whether they say you have a promise to get gold or you can get gold. Get the gold. What's the point of having a dollar? Because it was obvious that at some point, Nixon or whoever the president was, or someone in the United States and the treasurer is going to say, forget it. Go pound sand. And that's why when they say the gold-backed yuan game, there's no way China would say, okay, so if you've got yuan and you want some gold, just come and take it. Just give us back the yuan. Why would they do that? They can print as many yuan as they want, and they do. They got massive debt, massive internal debt in. They couldn't do it anymore. There'd be so many yuan that they're coming back to get the gold. They'd be out of gold in 3 weeks. All right. Nathan, why is Asia adding gold then? Now, you got to be specific. This is, again, that's what I try to do in this channel. What does that mean? Asia is adding gold. I don't know what that means. How much gold are they adding? Who's adding it? One of the reasons I do argue that Chinese and Indians, quote, add gold is because they're wealthier and because Indians have always liked gold. If you're a poor Indian farmer and your country is poor and you have no money and you love gold, you can't buy much gold. But as your society gets stronger, your economy gets stronger, and you get better farming methods, and you have more rupee, you can buy more gold. See, I think Americans view this gold and silver purchases, everything is about a collapse, because they know what's coming, and it's a game changer, and shit's going to hit the fan, and that's not why the world buys. The bulk of buying of gold and silver isn't to protect oneself against a piano falling on their head. That's there, but that's, I think, the bulk of all the gold channels and the silver channels here in the United States talk about the collapse. That's prepare for what's coming. That's the only reason to buy gold, when historically, yes, when people buy gold, they know that it's valuable, they know that it's wealth, but they're not preppers in the same way, I don't think. And I've had DeMarco on here. He lived in China. He says they're not buying gold because they want to. They're some, but a lot of what they buy of gold is because they want it. It's beautiful. They have it. It's a sign of wealth. It's a sign of status. See, when you're a stacker, it's almost like you're not appreciating the metal. You're just stacking it because it's like, hoarding food. Not necessarily. You're not a gourmet. You just want to make sure you have food. You want to make. I don't know if there's anything wrong with that. That's actually very smart. But my point is, that's not driving the bulk of the gold and silver sales in the world. It's not the stacker mentality. Look at those rounds that Chris Twain makes. Those are artwork. There's a value in those beyond the stack. Now, they happen to be priced close to spot. But the point is, I say that the majority of, I know it's not me, the statistics show that the gold and silver demand for jewelry is twice the investment demand. So if they're buying gold in India and China, and it does serve a dual purpose, no doubt. You buy a necklace, you can pass it on for centuries and so on, but it's not the same mentality, I think, as it is in the United States, especially in the stacking community where everything is about there's a collapse coming, there's too much debt, and I have to have gold or silver. Flight 19, Smaulgld should raffle off a gold eagle for subscribers only, limited to $5,000 $1 tickets. I'd make money off of that, wouldn't I? Guillaume Charles, thank you. You're welcome. I hope I explained. This is just my point of view, but my point of view is based on not just listening to 20 channels that all say the same thing. I try to look at as much data as I can and try to provide my own insight. For the love of coins, absolutely. The average person is an idiot when it comes to money and value. And that's why I also have my point of view, is when people say, oh, well, when the economy collapses, people will clamor for gold. Why would they? They don't know anything about it. Who's going to clamor for gold? I use the example of the Mark Dice videos. Those people aren't going to clamor for gold. They're going to look for the chocolate. They're not interested. That's the thing. And as I mentioned, it's not part of the financial system. Every year that goes by, there's fewer and fewer people alive that actually transacted with silver coins, that actually lived in the world when the United States dollar was as good as gold. That's 1971. The silver coins left circulation in Europe in the mid-60s, in Canada in the mid-60s, in the United States in the mid-60s. People, you know, say, oh, well, the word for silver in French is argent, it means money, and in Italian. They don't know that. We're 2 or 3 generations away from that. Bankers, generations away from ever even thinking about gold. Remember when Ron Paul said to Bernanke, you ever think about gold? And he's like, yeah, like when you ask me about it. He says, is gold money? And he's like, no. He's like, what do you mean it's not money? He says, well, it's an asset. Well, why do banks hold it? And he says, tradition. Now, when you first watch that and you've been steeped in the whole sound money concept, you think Bernanke's an idiot. And I'm not saying he is or isn't, but that's not the point. Most people watching that are thinking that Ron Paul is off his rocker. Why? Because they don't know any better. They're not understanding. They're thinking, okay, I have my wife has a gold ring. What does that have to do with how many dollars I have? That's how they think. So and we're further and further down the line of economic ignorance of the past and the ties of gold and silver to the financial system. So when people try to insist that it still exists, it doesn't. If you open your eyes and look and you talk to people, they don't know what it is. And the bankers, I don't even think anymore they're in a concerted effort to downplay it. There's generation or two of them that never even lived with it. So they don't even have to unlearn it. All right. ASMR people, when one gets the PM info from YouTube only, you get an inflated point of view. A video title, $500 silver in a month will get views. Well, that is absolutely true. And you saw the comment I got earlier that if I don't just praise the metals, that it's off-putting. Because people want to hear what they want to hear. They come to these channels, they see the same thing, they want to hear about the gold back yuan, they want to hear about the silver shortage, they want to hear about the COMEX default, they want to hear all these stories, and they want to believe them. And if I tell them they're nonsense, like, oh, he's a moron, he doesn't understand, I saw this, and this guy said it, and that guy said it, and this guy said it. Yeah, and they get a lot of views for that. And, you know, gold 50,000. If I did it, I did once, about a year ago, I did a video, I got like 8,000 views. It was something like, maybe it wasn't that many, but it was a few thousand views, far more than I ever get. I said gold $28,464 and silver also to go to $28,000 on September whatever 2016, 17. And I did it in my robot voice. And I just made up stuff. And I got like 5,000 views. But some people caught on that I was mocking it and they didn't like it. But still, people, it's like a train wreck. They want to hear what they want to hear about gold set to skyrocket. I mean, you have people telling you silver's going to skyrocket for 10 years. It's been the same price for 10 years, and you're telling it's still a good deal. Well, maybe it is now, but you have to realize that it hasn't been a good deal for 10 years. You can't say it has been. You can insist it is, and I got more ounces now than I had before. You lost. And you'd rather not admit that. You'd rather go to 20 other channels and tell you why it's ready to go. There's finding more uses for silver every day. And, you know, it's the most valuable thing on the planet. And if you stop to think about that, you could say that about copper, and you can say it about mugs. All right. Ghislaine Char, you're right. Before I educated myself, I thought Ron Paul's an idiot. And a lot of people do, because they don't. First of all, you have to read monetary history. Then you have to read Ron Paul to understand where he's coming from. Otherwise, it sounds like he's just out there in left field talking about gold. And if you have no experience with gold, why is he talking about gold? And then what makes it worse for him is that nothing happens. He's like, the dollar's going to collapse. The dollar's going to collapse. He's been saying that for 35 years. And the dollar doesn't collapse. They go, oh, but the dollar's lost 98% of its value. They don't make the connections. All right. I think that's about it, unless I've got any more questions or comments. I want to thank everyone, even the people who don't like to hear what I'm saying. You at least showed up. You heard me out. I appreciate that. And we'll see you tomorrow night, 8 o'clock Eastern Standard Time, right here. Thanks for listening.